Greetings everyone. After understanding the fully taxable allowances and understanding about the house rent allowances, which is one of the component of partially taxable allowances, we now come to the next, that is entertainment allowances. What is the tax treatment and how they are taxed in a partial way and partially they are exempted. So let us talk about this. Entertainment allowance is actually a very fixed amount of money which is paid by an employer to an employee to meet his expenses which are incurred on the maybe entertainment of customers or clients or suppliers or other business associates in their course of official duties. This is an allowable allowable part of the salary, and but it is not fully taxable. There are certain situations attached to it. So for the taxation purpose, the amount received as entertainment allowance is first included in the gross salary under section 15, and then this deduction is computed or is allowed under section 16 subsection 2, but only for the government employees. Rest of the employee, it is taxable. It is, in any other, in case of, there is no exemption for them. It is fully taxable if it is a employee of a private company. But for a government employee, they are partially exempted and partially taxable. So the tax treatment, as it is put before you, it is only for the government employee. Please don't forget that. It is included in the first step is that we include the complete amount in the entertainment in the salaries part. The entire amount of entertainment allowance received is first added to the employee's gross salary, and then we compute the deduction as per section 16 subsection 2, that is, after including it into income, in the income a deduction is allowed on the basis of these 3 points. So the first is basis of deduction is, first is our whatever the actual amount is received, whatever the actual means, we have to calculate again. Here also we have to consider 3 points, that is the actual amount received, whatever actual received as entertainment allowance, then 20% of the basic salary, and the third is the rupees 5,000. All these 3 figures, that is here on this, that is whatever the actual amount of entertainment allowance is received. Second is 1/5 of the salary, or it can be 20% of the salary also. It is one and the same thing. And rupees 5,000. So out of these 3, whatever is the least one is taken up as exemption. But for the non-government employee, that is case B, there is no exemption, means it is fully taxable. Okay, that means it is fully taxable. Some important points to be kept in mind here is that the term basic salary means the salary before including any allowances, bonuses or perquisites. And second important thing to be noted here is that the actual expenses incurred by the employee for entertainment are not relevant. The deduction is based only on the formula that is prescribed above, or the method that is prescribed above. And the deduction is available only and only to the government employee. For all others, that is private sector, public sector undertaking, or there are autonomous bodies or etc., their entire amount is fully taxable. Okay, so these things have to be kept in mind before we start computing that. So first, before going into any calculation, just check out whether the employee is a government servant or in a private or autonomous body or anywhere else. So let us come down to some practical points here. That is illustration 5. In case the person is a government employee, suppose Mr. A is a central government employee and his salary details for that year are as follows. His basic salary is 60,000 per month, or maybe 7,20,000 per year. That is 60,000 into 12. And entertainment allowance is 2,000 per month, or maybe annual basis it is 24,000 per year. So when we are solving it, let us do it here. Now when we are solving it, we'll put it here only. First of all, we will include it in the salary. That is, the gross salary here will be taken as gross salary will be taken as basic salary is already 7,20,000. We will add the basic salary plus entertainment allowance. So first it is to be included here. Basic salary plus 24,000 is the entertainment allowances, and therefore the gross salary comes out to total is 7,44,000. 7,44,000. So this is your step 1 always. Then next is step 2. In step 2, we have to calculate the deduction under section 16. So, because he is a central government employee, deduction under section 16, subsection 2. Subsection 2, we will again compare the 3 figures. The first is is actual allowance received. Entertainment allowance. So the actual HRA received is rupees 24,000. The second thing that we have to do is 20% or 1/5 as per the formula. If you want to just check back. So this was there, 1/5 of the basic salary or 20% of the salary. So 20% of the basic salary is of 7,20,000. So 20%, let us do the rough work here, maybe. Rough work, it is 20 upon 100 into 7,20,000. One lakh 44,000. So this is 1,44,000, and then the third one is rupees 5,000. So we have to make a comparison, the least of the three, that is either 24,000, 1,44,000 or 5,000. The least of the three will be given as deduction, and so since 5,000 is the least amount, so this is the deduction or exemption allowed. So taxable entertainment allowances he received 24,000, sorry. 24,000 minus 5,000. So taxable amount is 19,000. This is the taxable entertainment allowance. This is how we arrive at it. Coming to the next part, where it is the sixth illustration. Mr. B, he is working in a private sector. Mr. B works in a private company and he receives the following, that is, he gets the basic salary of rupees 50,000 per month, that is 6 lakhs per annum. Entertainment allowance is 2,000 per month, that is 24,000 per year. Now here step 1, obviously, since he is working in a private company, let us calculate about the taxation here, taxation part. His 6 lakh is the basic salary, and gross salary will be 6 lakhs, that is basic salary, plus 24,000. So your gross salary makes here 6 lakh 24,000. This is your gross salary. Now, if we talk about the deduction, will there be any deduction? No, there will be no deduction at all, because here he is working in a private sector. So whatever amount is there, he receives as your entertainment allowance will be taxable. So to calculate taxable entertainment allowance, it is 24,000 is the complete amount that will be taxed. Whatever he receives as this part, this amount will be the taxable here. Here, suppose let me just go for one more example for clarifying this rule. Suppose if a state government officer, he earns a basic salary of rupees 40,000 per month, and he receives rupees 1,000 per month as entertainment allowance. Suppose if this is another example, maybe I can put it here. Suppose if it is a government officer, he is earning a basic salary of rupees 40,000 per month, and he receives entertainment allowances as rupees 1,000 per month. In that case, what is the actual entertainment allowance he receives? Is 1,000 into 12, which is rupees 12,000, okay, annually. After that we go for this is the first point. The second point is 20% or 1/5 of the salary. So it is 20% of the salary is 20% of the salary, it is 96,000. Let us just cross check it. 6 lakhs 1,000 into 20 divided by so it is for 6 lakhs. It is computed on the basis of this 40,000. This basic salary is 4,80,000 annually. So 4,80,000 into 20% is 96,000, and third is rupees 5,000. So least of the following, that is here we will compare between 12,000, 96,000 and 5,000, and we find that this 5,000 is the least amount. So the deduction here we can say deduction or here it is rupees 5,000. So the total amount that he is getting the entertainment is 12,000 minus 5,000. So 7,000 is the taxable portion or the taxable income. So we can I hope all the situations are clear to you, that the first was the central government employee, the second example was in a private company, and the third, in order to clarify the rule, we just discussed about the person who was working in a government office. So government office means government, state government, not a central. So calculation for state and that we do it in this way. So maybe now we can conclude on the entertainment allowance. We can say that entertainment allowance is first added to the salary and then a deduction is allowed only for the government employee. Maximum deduction allowed is rupees 5,000 per annum, and for private employees the allowance is fully taxable. Actual entertainment allowances are irrelevant for the tax purposes. So this is how we treat the entertainment allowances. So this was the second category of partially taxable allowances after the HRA. HRA is the first partially taxable allowances. Now we come to the third one. Third one is the special allowances for meeting certain expenditure. That is section 10 subsection 14. So we can say to explain this, we can say that allowances are often paid by the employers to employees in order to meet certain specific expenses which are related to the job, or maybe for some personal circumstances, as we discussed as earlier. So under section 10 subsection 14 of the Income Tax Act 1961, there are certain allowances which are fully or partially exempted from tax depending upon their purpose and depending upon their implementation. These allowances are broadly divided into two categories, two main categories, because then these two main categories, as before you on the slide, that is A and B, they are further divided into more varieties. So the first broad category is that those which are exclusively to be incurred in the performance of the duties of one's office. They are exempted up to extent they are actually spent. For example, under these any category or any variety of allowances paid, suppose it is rupees 1 lakh. This allowance amount is given to the person, employee, out of this for certain specific purpose, to accomplish certain duties or whatever. Now, this is whatever, suppose out of this 1 lakh he could spend only 60,000 on the same purpose which was allowed to him. So he will get an exemption on this rupees 60,000. Remaining 40,000, whether the employer takes it back or not, but that will be fully taxable. If he is not taking it back, obviously it becomes employee's money, but he will have to pay taxes on it. This is category A. Coming to category B, those which are to meet the personal expenses. These are exempted up to a specified limit. So those which are exclusively to be incurred in the performance of the duties of his office, then special allowances which is granted to meet expenses wholly, necessarily and exclusively incurred in the performance of the duties of an office will be exempted from tax to the extent to which such expenses are actually incurred for the purpose and notified by the central government. Okay. So, this is about the two categories. Let us now move on to discuss each category in further detail. We have to know more components also of each one. So, we come down to the first category, that is incurred allowances granted to meet the expenses incurred in the performance of the duties of office. These allowances are actually exempted to the extent of the actual amount is spent by the employee while performing the official duties. If any part of the allowance is not spent for the specified purpose, then that part becomes taxable. Before us we have the components. First is your travelling allowance. It is this travelling allowances is paid to meet the cost of travel during the official tour or transfers. For example, suppose a person is transferred from one city to another. Now for this he needs to transport himself and his family. He has to get all the household items transported from one city to another city, and for doing that he needs the packaging to be done, and maybe all the personal belongings have to be taken from one place to another, and then they're unpacking and settling everything down. He maybe hires some packaging companies, and he has to pay that amount. He has to pay the transportation company. Maybe, for example, if you hire movers and packers and you take their services, they do everything. They come to your house, they pack everything up, and then they transport it to another city, and there they unpack everything, and they just settle your house. But you have to pay the amount for that. For whatever the company gives you for that, it is all taxable, but to what extent we will understand it. To the extent of actual amount is spent. Similarly, if it is official tours, similar is also included. So maybe we can say that, suppose if you are transferred from Delhi to Mumbai, and from your company you are receiving, suppose, 50,000 for as a traveling allowance. Now 50,000 as traveling allowance, but what happened, you hire movers and packers, and then you book your tickets also, and whatever you have incurred out of this, you have spent all 45,000 out of those 50,000. So what amount is taxable and what is exempted? The amount which is actually spent, it is exempted. So out of 50,000 you have actually spent rupees 45,000. Obviously for this you will have to pay, submit all your bills, your vouchers, your bills, everything, in order to receive back your money. So here it is that is there, and out of that 5,000 is taxable. Remaining 5,000 will be taxable. So out of 50,000, 45,000 which was actually spent will be exempted. Remaining 5,000 will be taxed. This is how you compute the exemption and the taxable amount. This is about the travelling allowances. Then next is daily allowances. Given to meet daily expenses during the tour or transfer, such as meals or lodging while you are away from the regular place of duty. For example, suppose you are given some task for which you have to move around different cities, maybe for 10 days. And you have to accomplish that task, and then you have to return back after the 10-day. So for this, obviously you are getting your travelling allowances, but at the same time you also are given rupees maybe 1,000 as daily allowances to meet your regular expenditures. So you are given this 1,000. So 1,000 is for lodging, maybe because when you are staying away from home, you need to eat thrice a day or twice a day, whatever your choice is. You need to sleep also, take rest, for which you will have to book a hotel or any some place, maybe some room for yourself. So those expenditures are to be met through the daily allowance. So the purpose of the daily allowance is given for you to make yourself comfortable, eat and sleep and lodge. To meet those expenses, you are given the daily allowances. So here usually the daily allowances is given is rupees 1,000 per day on the per day basis. Now suppose for 10 days you are there, you were given 10,000 and you have spent 8,040 rupees. Remaining 1,600 were left over. So when you come back, you just submit all your bills for 8,400 there. So your amount of 8,400 will be exempted, whereas 1,600, the balancing figure which maybe you do not return, but then that is all taxable. That 1,600 is your taxable amount. Coming next to the conveyance allowance. This conveyance allowance is actually granted to meet the expenses which are incurred on a local conveyance in performing your official duties. For example, maybe if you are using your personal vehicle and you are using your scooter, or you are using your own car to accomplish the task given to you within the city or all around, maybe on the outskirts of the city, but you're moving you have to move here and there. For example, a medical representative. MR, he has to travel here and there within the city in order to sell the medicine. He has to go from one hospital to another, to one doctor to another for marketing purpose. So, for this marketing the medicine and selling the medicines, so the office or the employer pays him certain amount called the conveyance allowance to meet the petrol expenditure or diesel expenditure. So, for whatever amount he is given, whatever amount he spends is all exempted. The balancing will be taxed. For example, suppose he has been given 10,000 per month as conveyance allowance. So, and he spends only, suppose, 4,200 out of, 8,200 out of 10,000. This 8,200 will be exempted, whereas the balancing 1,800 will be taxable. Okay. So, this way we compute the conveyance allowances, and it is taxable and exempted on the basis of its consumption. Then helper allowances, they are paid to meet, to meet expenses on engaging a helper or assistance for performing official duties. For example, maybe a visually challenged government officer employing, he needs a helper, and therefore the office allows him to keep a helper for office work. He can claim the exemption to the extent of actual payment made to the helper. For example, maybe the company pays him 20,000 for hiring a helper, and he fixes the helper's salary for rupees maybe 18,000 or 19,000. So, that amount, whatever he pays as a salary, it is consumed and therefore it is not taxable. The balancing amount will be taxable. Next is academia or research allowances, which are granted to people from the academic background. They are granted to encourage academic research or professional pursuits of an employee. That is, maybe when we are writing a book, when we are writing a research paper, we need to explore, we need to move from one place to another, and we have to gain certain insights. So, for this, maybe we get some research allowance from the university or from the Government of India, and whatever we actually spend, and we submit the bills for that, that will be allowed as exemption. The remaining figure will be taxed. And then finally, we have the uniform allowance. It is given to meet the cost of purchase and maintenance of uniforms which are required for official duty. I would say here that you must have seen the police officers wearing the uniforms, the doctor wearing the white coat, the lawyers wearing the black coats and a bow. You must have seen the military, the army people, they have their own dress codes and uniforms. So, money is the companies or the bosses, employer, they provide them certain amount for buying and getting them stitched, and maintenance also. Maintenance will include ironing, washing, and maybe getting refreshed or dry cleaning, whatever is required, that comes under the maintenance of the uniform, which they have to mandatorily put on while performing their duties. So, here that amount is given to them. So, the security personnel, they receive rupees, suppose they security personnel also, they also have to wear the uniform. Suppose they are given rupees 2,000 now, a monthly basis. This person purchases cloth and gets it stitched, and maybe the expenditure is 5,000-6,000 something, and then regular washing, dry cleaning or ironing, all those things. So, if he is getting 2,000 per month, suppose, so that is 24,000 per annum. Out of 24,000, he will submit the bill for washing, ironing, purchase of the cloth and getting it stitched, etc., etc. Suppose out of this 24,000, he has spent 21,000 something. Those 21,000 will be exempted, whereas the remaining 3,000 will be taxable. So, these are some of the that is expenditures which are incurred while performing the duties. But we have more items, so we will continue in the next class. We do this much today. Thank you.